Hello, I'm joined by Gary Hewitt, who's Head of Research at GMI Ratings. You've been following shareholder activism, shareholder proposals for many years. You've shared a lot of data with us here at the FT. There does seem to be a coordinated pushback against the use of shareholder proposals, claims that they are clogging up management time and using up resources. What's your view of that pushback? Is that going to gain some traction? Is there some merit to the arguments of Dan Gallagher and others?
This is really what we're seeing as a coordinated or seemingly coordinated kind of campaign that's characterized many of these shareholder proposals as representing some kind of special interest or small shareholders, trivial, as you say, gumming up the works. What's interesting to note, however, is in addition to some of these small shareholders, we also see a lot of institutional owners who are significant stakeholders in many of these companies, but also that the kinds of proposals that are being forwarded by a lot of these individuals are about really core issues of shareholder rights. Right to vote directors, elect directors by a majority, right to act by a simple majority to effect a transaction, other things that are broadly supported by the institutional market. It's a case where in a world of dispersed ownership, where no one owns a big chunk of the company, there's a big kind of free rider problem there, where no one will step up. And these individuals actually are stepping up, putting in proposals to effect change that really grabs onto basic issues of accountability for these companies. And I'm not sure I would call that gumming up the works so much as pushing basic issues of corporate governance forward.
And I think some of the data shows that some of the smallest shareholders who are putting these proposals in are getting some of the biggest votes in favor of their proposals. Have they made a substantive change to corporate democracy and to a substantive improvement over the years?
I mean, yeah. I mean, if you look at, for instance, the prevalence of classified boards in larger companies, it has declined.
These are staggered boards.
Yeah, right? Boards where only part of the board is elected each year, and it functions as a takeover defense because it almost takes at least 2 years to get a majority of control of the board. Those have been dismantled over the last 5 to 10 years by the actions of some of these individual shareholders, by actions of other shareholders, but most importantly by the votes of a majority of shareholders at these companies. The majority of the owners of these companies have said they want this. So these individuals are really the catalyst to those kinds of changes. Similarly, a half-decade ago, we saw these changes in majority election for boards. Right now, or 10 years ago, the vast majority of companies, a board member could be elected with 1 vote if there was no contest, if there were the same number of nominees as board seats. Now, most companies, the majority of companies, larger companies, if you don't get a majority of votes, at least you're required to resign. Whether they actually leave the board is a different question, but there is that sense of accountability.
Now, all that said, there are categories of proposal that do not seem to be reaching above 20–30% on average. A lot of the social proposals, human rights proposals, where interest groups are involved sometimes, or individuals with particular interests, and more recently political battleground proposals on lobbying policies and things like that. Now, they're not rising to the level of majority support. Do you think they will over time? What sort of trends are you seeing?
Well, I mean, there's a lot of variability in the response to these proposals. Let's say, broadly speaking, social and environmental political proposals. So let's say if you look at political proposals, they run the gamut from proposals to prohibit or severely curtail any kind of political activity on the part of a company, all the way to simply disclose the policies and procedures that the company is using to mitigate or manage the risks that might be embedded in making political proposals. The ones that are more prescriptive have tended to get lower results. It's harder for shareholders or a broad body of shareholders to buy in. Ones that are targeted towards better disclosure of policy, enhancing the information that's available to shareholders, they have gotten stronger support into the 30s or 40s. A couple of them we've seen actually get majority support at companies where this seems to be a point of sensitivity for shareholders.
And are they changing corporate policies in other ways, say through engagement before getting to the point of a vote?
Yes, and that's one thing that we'll see a fair amount of, is that proponents will put a shareholder proposal on the ballot, but that's part of a spectrum of engagement. Shareholders, especially in the last 3-4 years, have become much more, there's been much more engagement between companies and boards and shareholders over corporate governance, social, environmental issues. And many of these proposals won't even make it to a vote. And they don't necessarily show up in the voting statistics because they didn't get voted on. But change was affected. Enhanced disclosure, better practices is typically the outcome of these kinds of engagements. But the proponent will withdraw their proposal. It doesn't end up on the ballot. No one ends up voting.
All right, Gary Hewitt, thank you very much for joining us.
Thank you.